Good morning, everybody. Kirk Spano, Investing 2020s. And today we are going to do a retirement income option show again, and we'll review some of our stocks along the way. I want to try to help you make as much as you can selling options on some of these stocks because boy, oh boy, has it been profitable this year. So over at Fundamental Trends, very basic setup here is a little bit of education for you. And then the important articles, which are Shooter's Primary Waves, which will help you selling calls and selling puts. And then the retirement income options, which I write to give you very specific recommendations. And Plug and Play Stocks was out a while back. So you'll see a few more of these out. The stocks of the week have moved over to sustainable growth trends. But the retirement income options, you get 3 or 4 of those a month. You get the option expiration article, and then weeks where I think there's something to do, I post another one. Same content as over at Margin of Safety Investing. So I want to start here by reviewing the May option expiration update. We took a look at a number of things at that time, the regional banks, which I suggested you may want to sell some cash secured puts on. Had you done that, they would have expired because KRE went up a bit. You could take a look just by clicking the link and see that in the last 6 months, there you go. Had you sold cash secured puts in here, this is why we use technical indicators, which we'll get to in a moment. ETF went up. That simply means that your cash secured put expires and you collect the income, collect the premium income that came into your account, and you don't have to use it to buy any of the ETF. Now, I would expect this to turn over a little bit. You get another chance to sell 2 or 3 months from now. Everything's really starting to suggest that a correction can start really any time from the middle of August into October. One of the big things that's going to weigh on the market is the Fed seems almost certain to raise interest rates again in September because the economy has not slowed down below 2%, much less below 0. And it would appear that the only real inflation is the potential for it in energy in the short term, as well as wages. But I don't think anybody cares about wages if everything else is falling in price or at least stable. And if AI is going to increase productivity, does anybody mind making a little extra money while prices are stable? Or does anybody really mind making a little extra money at all? So the Federal Reserve is nearing the end of what I've been calling the Great Normalization. And that's going to be good for a lot of people because it really is the nirvana. It's almost utopian, economically speaking, that wages would be the only type of inflation. Can that put a little bit of a squeeze on corporate margins? It could, but with AI counterbalancing the higher wages, which would suppress hiring, I think it all comes out in the wash. I've been talking about the potential for a long-term economic boom in America, a little bit less slower growth forever. Europe is the place where I just think that they're the ones in the worst shape, but I'm not too optimistic about China, which could put a damper on things unless they open back up to the world. Japan, we talked about in the last call. So I want to keep this all on the front of your mind when you're looking for investments. Slow growth forever really is forever. But there's some places where the growth isn't as slow as other places, and we want to look for those. And because the United States is one of the leaders in technology, we're probably going to do really well given the current employment situation and the shift in the jobs mix in this country. There's going to be a lot more people providing healthcare, but it's not going to have to all be doctors. Although I looked for a new doctor the other day, and the youngest doctors I could find were all around 50 years old. I mean, there are hardly any doctors in their 40s, and almost none in their 30s. So that could be a problem in another decade when all the baby boomer doctors have finally retired. Keep an eye out on how AI applies to healthcare. Another company that we took a look at was Teladoc. I don't know if it was in this one or the next one. Talked about Teladoc and having sold the $20 puts, $22.50 August puts. Take a look at that chart and look at it jump up. So these are going to expire I have some orders to close these out. They might be down to a nickel already, but we made a pretty nice premium of about buck and a quarter, I think we got. So that is a 5% gain in about 2 months. Annualized, say multiply that by 6, it's a 30% annualized gain. And that wasn't even a great trade. But if we take a look at Shooter's primary waves, we take a look at the chart, we can see it's just getting ready. Just getting ready. It's in the upper 20s right now. Look at that base. Great base. Looks like it's going to run to 48, probably pull back a little bit and then make a run. Now, is it going to get all the way up to 206, give or take? I think it might. I don't think it'll happen that fast necessarily, but there's a chance. Teladoc might be on our list of 10 baggers at some point. This company has a ton of data. I was talking to a hospital administrator yesterday, in fact, second one I talked to this week. And the impact of AI on healthcare is going to be phenomenal. Teladoc is going to be one of the leaders there. And given that they have so much data and the ability to use it across different hospital networks, insurance companies, and whatnot, putting their data into AI models, mind-boggling, I think. I think you're going to see massive deflation in healthcare using this data and AI, that this company might just start pulling in contract after contract after contract across major hospital systems in this country. United Healthcare could be a competitor, but remember, they don't want the healthcare pie to shrink. So healthcare is going to shrink as a percentage of the economy at some point, probably sooner than later. Remember all these things that I was forecasting for 2026 and 2027? It wasn't just the EV revolution and the pivot in clean energy, but it was a lot of other things having to do with the boomers. Remember, aging demographics and technology are the other secular trends. So companies like this that are going to benefit from AI in healthcare, I think there's probably other 10 baggers out there that we're not paying attention to. So I really like Teladoc. I think that you can sell cash secured puts on it again. That'll be in today's article. And I think that you should get over any angst about this stock, because clearly it wants to break out. It's been in this holding pattern for over a year. This is the type of horizontal consolidation that you look for. And then you get your breakouts. And of course, there's corrections within the breakouts of, 30 to 50% pretty commonly. And again, that's not 30 to 50% on the share price. It's 30 to 50% on the gain. So if this stock goes from 20 to 48, you'd expect, a third to half of that $28 gain to be given back at some point. So $9 to, $14. And then you can sell cash secured puts again. And if you missed getting in, you can buy. So this is one that we really like. Another one that I really like is Square, aka Block. You take a look at this one and remember that it's tied to not only commerce, e-commerce, and small business, but it is also lending to small business because they have proprietary information about small business cash flow. Again, I'll use the example of my daughter's salon. They see all the transactions. When she asked for a small business loan, in fact, they said, hey, do you need a small business loan to get bigger? She said, yes. They said, we can give you $40,000 right now, and you just have to pay it back through what we already know is your cash flow. Interest rate wasn't too bad, worked out to below 20%. And, for a small business, remember, there's billion-dollar companies out there borrowing at 8, 10, 12. So for somebody with a salon that's doing $400,000 a year, $500,000 a year business, to be given $40,000 at like 18%, and it's going to get paid out of the receipts, it's pretty impressive. Square makes 18% on their money. They're almost guaranteed of getting paid back. And by the way, they have all that Bitcoin on their balance sheet. And if you believe me now, and hear me later, right? That's backwards from Saturday Night Live. Hear me now, believe me later. Bitcoin's going to 6 figures. And that is not completely reflected in the price of Square right now, Block Square. I think that Square has the opportunity to expand globally pretty rapidly at some point, especially in the emerging markets. So this one could break out here in the next several months. So you want to keep selling cash secured puts on it and buying the dips. And luckily for us, because it's tied to Bitcoin, the dips are pretty good. So when we get one of those $7, $8, $9, $10, $12 pullbacks, that's not a spot where you want to go, oh, I'm scared, I better sell. No, that's a spot where you go, okay, how good of a price can I get? How much can I make selling cash secured puts on the panic? That's what you're looking for. And I'm not going to make the huge case for Bitcoin right now, but BlackRock's applied for an ETF and they've never been turned down before. So there's a physical Bitcoin ETF coming, and that'll open the floodgates to 4, 5, 6, 7, 8 more. We are very close to Bitcoin spiraling up to six figures, and Square is going to benefit from that. So if you don't want to be completely tied to Bitcoin, but you want Bitcoin exposure, Square. Another way to get exposure to Bitcoin without having to actually buy Bitcoin, and this is a great way to get it into your IRA, is to sell puts on the ARK Next Gen Internet Fund. Now, it ran up recently and I took profits. I'm just looking for another pullback to reset this and get more. But remember, there's negatives that come with Cathie Wood. She's purely a long-term investor who doesn't trade well. So you're not relying on her to trade for you. You're trading this like an index ETF. So if this one pulls back into the 50s, then we're going to take a look at selling puts on this again. The must not be here. Do I not have GBTC on here? Not that one. All right. Well, we haven't talked about GBTC in a while, but GBTC is contained within the ARK Next Gen Internet Fund. And I think that it's about to trade at par. As soon as BlackRock gets approved for their Bitcoin ETF, GBTC should shoot up to a discount of single digits. And then that play is almost over. Then you just really want ways to have Bitcoin exposure in your IRAs, but outside of your IRAs, you just buy Bitcoin. So selling the options here, this is the July expiration. This is last week. Remember, I did a little bit of an about face on TLT holdings. I'm still selling the puts because those get pushed out and you collect now. And I do think that interest rates are in the peaking process, but given how hot the numbers were, as I mentioned earlier today, given how hot the economic numbers were, I think the Fed is for sure going to raise in September. And then you have student loans coming back online in October. So that might be the counterweight to the hot economy. And that probably will lead to the Fed making September the last rate hike. Still looking at this one, stocking that. Cash secured puts. If you had sold the Ametis $5 750 puts for the various months, you'd already be profitable because Ametis is up 10% today. They have earnings on Thursday. I encourage you all to listen to that live, and then we'll review it. New Fortress Energy. There's starting to be some fear about natural gas in Europe again. That one would already be profitable for you. Occidental Petroleum jumped a couple bucks. That would also be profitable for you. What has Pfizer done in the last couple weeks? There you go. This is the one. This is the one that you should probably be selling right now. Testing that line again. We can pull up their bigger chart. EFE, take a look at that. We take a look at it here too. On the monthly, their RSI is super low. Flip that over to weekly, and it's super low. So you're really close to wanting to sell puts on Pfizer. It is dipped into our buy zone. If you sell the puts now and get a buck or two, and it bounces back up, you just keep that money. And if you get a net cost in the low 30s, I think that's pretty good. That low 30s, look how it holds. Held here. I mean, looked like resistance right there. Broke through, jitterbug, held up. A little beat up last year or pre-COVID, up since COVID. Now it's consolidating. This is basically the end of the momentum down. That's what RSI is measuring. Price somewhere in here is about right. And you can try to be perfect, but I think that you should probably start scaling in on Pfizer if you want to own Pfizer long term. I think eventually it gets back up here, chops its way up, gets tested, and then breaks out. Pfizer's mRNA platform is a big deal. With all the data coming and all the AI coming, you're going to see major breakthroughs in medicine over the next decade. Pfizer is going to be a big winner there, and it pays a big fat dividend. SunPower, the $9 September puts we were looking at last week, already jumped up, so 5% today. Go back and look at the 1 month chart. So here you go. We're selling the puts. It already jumped up. You'd already be profitable. How are we doing that? Pretty simple. We're just taking a look at the monthly charts, overbought and oversold. So these are all stocks that are overbought on the long-term chart. So all of these you should probably be selling covered calls on. Flip it over. You get your oversold stocks. I'm not in love with any of the telecoms right now, but if you wanted to sell puts on Verizon, I'm sure, or AT&T, you certainly could, right? Because they're oversold on very long-term time frames. And when that happens, all you have to ask is, will the company survive? If the answer is yes, go ahead and sell covered calls. Spire Global, I've been buying recently, just outright buying. There's not a good options market on it. Same thing with Planet Labs. It is becoming very, very clear that these satellite companies have huge first mover advantage, to the point where I took one of my satellite stocks off the list because the other ones were kicking its butt. So the companies that already have satellites in the air, it didn't matter that there was another company with better technology. They didn't have satellites in the air. Not enough anyway. First mover advantage is a big deal. And remember, what's the argument for that being a big deal? The argument is at some point, governments are going to start slowing down the deployment of satellites. We know that there's going to be mining of asteroids at some point. We know that. We don't know how fast, but we know that it's coming. So that means 10 or 20 years out, all these companies that pollute the environment to get us our metals and minerals will have big competition. We want to have a way of being a part of that. The satellite companies and rocket labs are ways to do that. In the private equity market, I think it is overpriced to buy the SpaceX stock, because you can get that in the private markets, but the valuation is so incredibly high. So think of the satellites the same way you think of the EVs. Why is Tesla 10 to 20 times more valuable than the other car companies? It doesn't make a lot of sense, given that they have legacy customers and real estate that they can repurpose. Same thing with the space stocks. Take a look at all these other competitors to SpaceX and Starlink and start asking yourself the question, how does the valuation difference resolve itself? I would argue that these smaller companies are going to catch up. Maybe not all the way, but where SpaceX or Tesla might double in the next 10 years, these other companies, to close that gap based on business actually done over time, might go up 5 or 10 or 20 times, even if they never catch up all the way. So for you as an investor, you don't care if Tesla goes from 700 to 1400, if you can own Ford that goes from 12 to 120. Argue all you want about Tesla's being better. I don't care. I can take a look at the math and say, well, Ford is still going to outsell them for a very long time. So why wouldn't they be closer in market cap? So when you think about these things in market cap, it all starts to make a lot more sense. When you take a look at this RSI on different time frames, you start to understand where the super long-term opportunities are, but also the more intermediate opportunities. So why is Inspire Global oversold on the weekly as much or more than it is on the monthly? So on the monthly, we saw Spire Global at 27 for RSI, super oversold. But on the weekly, you don't see it. Gotta keep scrolling down. 45. So what does that tell you? What does that tell you? Why is Spire's RSI higher on the weekly? You need to know that. This is an answer you need to know. That's right. It's turning up. Exactly. Several of you got it. That means that in the shorter frame, it started to work its way higher. So let's take a look at the chart. I like how they call it super charts now. There you go. That's right. See? It bottomed. It's been pushing its way higher. Super long-term chart came down a ton, found itself a bottom. That's why we look at different time frames. Still reacting to this on the monthly chart, right? Because we're barely a month out from that. But in the last several weeks, it's been working its way up. See where it chopped in here? This price level was probably right. They did the dilution. The market didn't like it. Anger sold it down to here. And now it's back up here. And what do we know when we overlay the fundamentals about Spire Global? It's on the verge of profitability. $100 million a year of annual recurring revenue for a company that's valued at about $100 million. Isn't that a pretty good deal? Hey, I'm going to pay $100 million for the company and get $100 million a year. Now, they have $100 million in debt too. But if you could buy a whole company and be making money within 2 years, I mean, by the third year, you'd be profiting $100 million a year, right? Oh, and by the way, they're growing at over 30% a year. You should be buying Spire Global right now. There's not a good options market, so unfortunately, there's not really puts to sell. There will be, though. As this goes up, and probably after the reverse split, if they still do it. I mean, this one's earnings are this week, too. This is a stock that probably is going to triple pretty quick. I think it's going to be a $2 to $3 stock pretty quick, and then whatever they do for the reverse split. So when you take a look at these articles, these are almost always trades that should be made the week of. Every now and then it takes a couple of weeks to get down to that minimum price that I specify, but all of these are becoming a big deal. Covered call ideas, these are oversold on the monthly, still are. Just took a look at that. So stocks that are both overbought on the monthly and the weekly, that's a pretty strong reason to take some profits. Nvidia, Apple, Palantir isn't overbought on the monthly. So let's take a look at Palantir. On the monthly, it's only a 62. On the weekly, it's 76. So it's still getting pulled up on the short-term performance, and it's up big today. But we're getting close to the point where, depending on how big your position is in Palantir, we're getting close to maybe you're going to want to trim some in the not too distant future, or at least sell covered calls on part of your position. Now, even though Palantir is up today and not anywhere near being oversold, I did sell some cash secured puts today because it kind of head faked me. I sold some $18 covered calls a couple weeks ago when I was worrying about the market. So I sold cash secured puts at $18 as well, collect more premium. So if the stock ends up below 18, when my covered calls and they're the same month, I had them for the same month, and puts are ready to expire, if it's below 18, I keep the covered call premium, right? Because it's not getting called away. I get some shares put to me at 18, but I've got $2 from having sold the covered calls and $2 for having sold the cash secured puts. So I get a net cost on Palantir at about 14. So sometimes if you do sell covered calls, it'll make sense to roll them sometimes. And I still might do that. But other times you may sell some cash secured puts as it starts to get away from you to collect more premium. And you hope that the price of the stock is about at your strike price. A little plus or minus doesn't matter. It doesn't matter if you're assigned or called away. It doesn't matter. Because now you're close at 18. You've got all that premium in your pocket. And if you need to buy some stock back, fine. And if the stock is assigned to you, you can just fire out more covered calls. So the size of your position is necessarily going to fluctuate a bit because we're not going to be perfect on selling these calls and puts. So there is some management involved here. I'm trying to walk you through how to make those transactions and decisions based on what's going on in your portfolio. The thing with Palantir is they just keep getting good news from analysts. Now the company is going to have to keep up with those projections. So what's getting set up here? If all the analysts are super bullish, what happens if the company can't quite meet that bullishness, can't quite meet those expectations, even if they do keep doing well, even if they keep growing? If the analysts are super bullish and the company misses by a penny, right, the stock will get beat up. So monitoring the expectations of analysts and the general public is important. Elliott Wave kind of keeps track of the public. The quantitative analysis I do keeps track of the big guys, institutions, and then we can keep track of analysts all over the place. Everybody's got that now. So understanding what the expectations are and whether or not it's more or less likely to have a disappointment or upside surprise is important to how you manage. It's one of the things that goes into doing this. Not just, hey, it's a good company, I'm going to buy it, but rather, what does the public think? Why are they pushing it the direction they're pushing today? And what are they likely to do tomorrow? If you can get a good feel for those ebbs and flows with your cheater, which is relative strength index on the monthly and weekly charts, you can sell these puts and covered calls pretty close to where you should be doing it. Most of the time, not all the time, and collecting tons and tons of premium from time to time when something runs away with you, from time to time when something runs away from you. You have to adjust. You have to manage a little. So these are your stocks to take a look at for potentially selling covered calls. If they're on the monthly list as well, like Nvidia and Apple, probably sell some covered calls. And then these, if they have low RSIs on the monthly, and you can see that they're overbought on the, and you can see that they're oversold on the weekly as well, or close to it. There you go. This one's a perfect example. We almost bottom ticked that one too. And high volatility is almost always a recipe for high premiums. And that's why you have to look at both the monthly and the weekly. Because let's suppose there's a stock out there that on the monthly is like at 50, right in the middle. But it's coming off of having been overbought. So the trend was from an RSI of 70-ish down to an RSI of 50-ish on the monthly chart. I want you to think this through. RSI was around 70 on the monthly and is now 50 on the monthly. And on the weekly, it's also oversold. That means you might get a little rally short term, but the longer term trend seems to be down. So in those situations, unless the price is also undervalued, or at least below fair value a little bit, you gotta be careful about selling cash secured puts because there might be another big leg down. All right, I see a question. Let me answer it. Do you think AI will reduce demand on doctors' ability to earn a living? No. We're going to have a shortage of skilled people in the economy. It doesn't matter what type of skill it is for decades. Remember, population growth rates are turning over in virtually every economy, with the exception of a handful of emerging markets. In places like Japan, the United States, China, Europe, where you have these World War II babies, right? The baby boomers in all these places. And in some places, it wasn't quite a boom, especially China, because of what their horrific policies were. The aging of the population keeps people needing healthcare, but there's fewer doctors hitting the system. Combination of less people going into it as a percentage of the population and the population growth being lower. I was explaining AI to somebody yesterday in the pool. And I said, hey, how is this affecting you yet? Or how is this affecting you now? Or what do you see coming? She said, it's going to be like an assistant for us, where we start the project and end the project, but in between, we get a lot of help from the AI, doing the research and helping write the proposals or writing the communications. And then we have to make sure there's no mistakes, and then we have to edit it, put it all together, but it still saves us hours and hours of time on the research end and writing the outlines and things like that. For a doctor, and you can apply this almost any industry, you're going to say, look, this is the problem. Here's what we know so far. Way down here, on the other hand, is a solution that we want. And in between, we have to figure out what's most likely to lead us to a solution. For doctors, it's going to be like having an AI assistant. Maybe they'll call it House, right? Like the TV show. In fact, I would bet somebody does that. It'll help the doctor get from problem to diagnosis and treatment plan much quicker. And here's the other thing that people aren't considering. Right now, for doctors in particular, and this is why I love Teladoc as a stock, they have a lot of litigation risk, which forces them to start with the least intrusive treatment plan, even if the diagnosis is less likely to be correct. It might take months and months to get to the proper diagnosis and treatment plan because they were first trying to make sure they didn't get sued. Because you can't really sue them if you get sicker down the road because the diagnosis wasn't right, because they just go, well, that's the process. Can't guarantee I'm right. But with an AI, they'll be able to lean on that AI. It'll become part of the protocol, and they might skip 2 or 3 potential diagnoses to get to the one that's most likely. And what we know is AI is getting it right about 90% of the time when the correct symptoms and everything are inputted. That's why in the future, you can't not tell your doctor something, right? Because you're a little embarrassed. You tell them, hey, I ate this, I went there, I slept with so-and-so, I jumped off a bridge, whatever. You're going to tell them everything. They're going to put it into the AI model, and you're going to get better. And you don't want to tell them that you did that thing or ate this thing or whatever. Then the AI is not going to have complete information. You might not get saved. But these AIs are going to be a shield from litigation because they're going to be incorporated into the system. Can't sue an AI. It's just going to be a tool that makes things highly efficient in the future compared to what they are now. That'll drive costs down. But you still have all these people that are aging, right? So you still need to get in front of the doctor. And we need a lot more doctors, in fact, and nurses. We need way more nurses than we need doctors. So hopefully, from an educational standpoint in this country, we address that somehow, right? We make becoming a doctor or a nurse not terribly expensive on the front end. We'll see. So anyway, going back to the oversold, on the weekly chart, take a look at them. Pfizer is the one that jumps out to me. N-phase, okay, let's take a look at N-phase on the weekly, right? It's 39. Well, let's take a look at N-phase on the monthly. Company that we love, but it's not all the way oversold yet. So we're going to take a look at the chart. I'd just like to point out that I got scoffed at when it was up in here, and I said that it was going to fall, right? People they laughed at me. And here it is all the way down here. I think there's one more leg down. I don't know that it gets to 100-ish, but it might. Somewhere in here, end phase becomes attractive again from the risk reward standpoint, right? It's not sensible to buy a stock if it can't beat the market and the reward doesn't far outweigh the risk, right? It's only sensible to buy a stock if the reward is 3 or 4 times more or 5 times more than the risk. You can make that even bigger if you find them. Right now, I think end phase is about fairly valued, but it still has more room to the downside because usually you want to buy when it's both oversold and undervalued. And right now, it's not quite oversold. It's not quite undervalued. And because of the way human psychology and momentum work, there's probably another leg down. If you take a look at end phase, let's take a look at Shooter's most recent chart. It was in a swing trading note. So I always tell people to use the search bars because they're ridiculously helpful. Well, look at that. We don't seem to have a recent chart. Well, I bet that we get one soon. All right. Any other questions? Did the way I explained things today help you understand the way to think about when to sell calls and puts? I hope so. That's why I would love everybody to have TradingView. Just this feature right here, being able to look at different time frames and compare them for $100 a year, $150 a year, whatever this is. You make that back in one trade. Just being able to visualize this stuff and go back and forth from weekly to monthly charts. And then you overlay your fundamentals or underlay them, as the case might be, and say, okay, I'm looking for oversold and undervalued. And setting this up is super easy. These are all presets. I use the presets. Nothing else to do. Monthly, weekly, done deal. And I'm using the oscillator screen. You can use these other ones too. The trend following is pretty interesting. And then you can just add the RSI if you want. Sometimes these bust out like this one is doing. I like the oscillators. The oscillators to me are the most powerful. Trend following is, day trading. So there you go. On the day trading, they didn't like Spire Global, but on the oscillators, which measures the change of pace, the rates of change, it says buy. There you go. End phase was still on sell. Nutrients on buy. This is one that we introduced a month ago. So Nutrient a month ago, right? Let's take a look at that one. There you go. That's the last month since I wrote about it. So let me show you the article for that one. Use the search bar, pull up the most recent article. There you go. Plug and play stocks. There you go. Nutrient, new. We've done well with this one before. If it reaches the 40s, we want to start accumulating, but it was in the 50s, so we sold cash secured puts. Those puts are going to expire, and you just kept that premium. There you go. Talked about it way back in April, actually. So there you go. What did it look like in April? Yeah. Told you it was falling. Then it took another month, too. Because when we started paying attention, because you could tell that it was heading down. There you go. Oh, this was an old article. What was it? April of 2022. So April of 22, I told you to sell it. It's pretty good, isn't it? That was a pretty good sell. So I guess we first started talking about it early July here. We ran away right away. So what we want to see is it come back to around here. Get down to around 60 again. We sell some puts and buy some stock. And this one's a very good stock for dividend investors. All right, let's call it a day. Aaron's the run. Articles are right. I hope you're thinking about this because these option premiums are obnoxious. I mean, you can make 3 times more what you do on dividends selling puts and calls, maybe 4 or 5 times more. I think Teresa makes like 1,700% a year selling options. I'm just kidding. All right. Have a good one. I'll get this posted.